Understanding estate tax. A guide to what it really means. Hello everyone, and welcome to our English learning channel. Today, we're going to demystify an important financial term that you might have heard in the news, in movies, or when discussing wealth and inheritance. It's called the estate tax. By the end of this video, you'll not only know what it means but also how it applies to everyday life. So, let's dive in. Estate tax is a form of tax that is imposed on the transfer of the estate of a deceased person. The estate refers to everything of value that an individual owns at the time of their death, like their home, car, investments, and personal belongings. But it's not as simple as taxing everything right away. There's often an exemption limit, which means only the value of an estate above a certain amount is taxed. This limit varies by jurisdiction. Some countries have it, some don't, and in some places, it's quite high, meaning only very large estates end up being taxed. The way estate tax works can seem complicated, but let's break it down. When a person passes away, their assets are assessed to determine their total value. This is often done by an executor, a person named in the will or appointed by a court. If the total value exceeds the exemption limit, then the estate tax comes into play. The tax rate can also vary widely. For instance, it might be a progressive rate, meaning the more valuable the estate, the higher the percentage of tax that will be paid. It's important to understand that estate tax is distinct from inheritance tax, which is paid by the person who inherits the money or property, not the estate itself. So, who's responsible for actually paying this tax? Generally, it's the executor of the estate who must file the necessary tax returns and ensure that the tax is paid out of the estate's assets. This process has to be completed before the assets are distributed to the heirs. Because of the potential impact on an inheritance, many people do estate planning. This involves structuring a person's financial affairs so that the estate pays as little tax as possible. Some common strategies include gifting assets before death, setting up trust funds, or making charitable donations. While the estate tax is common in many countries, it's not universal. Each country has its own rules and rates. In some places, the estate tax is seen as a tool for reducing wealth inequality, while in others it's criticized for being a burden on families. And that wraps up our explanation of the estate tax. Hopefully, this video has shed light on what can be a complex topic and helped you understand a bit more about how taxation can affect an individual's assets after they pass away. As always, we aim to make learning English enjoyable and informative. Until next time, keep practicing, and we'll see you in the next video.